Hey, I'm Jacob Sonnenschein, stock pick writer with Barron's. You are watching Taking Stock.
Stock exchange and right on cue, Peter Tuchman, the Einstein of Wall Street. I have a rolling rule with Robbie. I was like, if Einstein rushes in, just hand him the mic and let's do this. What'd you see interesting? So kind of S&P trying to make up its mind on a day where we do have 9 equal weight sectors higher on the day.
You know what? Look, I think it's a constructive day, right? We had a lot of volume, like rotational volume in the day, right? It was not. We don't have a sense of really. I mean, the SPY has been up and down all afternoon, and it was flipping. The imbalances that were coming in was to buy 600 million, sell 600 million. So it's really indecisive as far as that goes. This morning we came in, it felt like we were going to get a relief rally, and then spent the rest of the day sort of, eroding a little bit of it. But you know what? They're constructive days. There's nothing that negative. There's the advanced first declines are significant. Significantly not decision made, all right? The bottom line has been 50-50 for the last 4 or 5 days.
Yeah.
So I think that, for me, that keys in rotation in a big way. People wanted to sell it, they could, they don't want to. They're kind of waiting around for the next move, and we're obviously going to get a lot of Mag 7 earnings coming in the coming days.
Yeah, we certainly are. And so for a day like today, we don't need to see technology lead. We see consumer staples, telecom, consumer discretionary, some other sectors do the heavy lifting.
Big footprint as far as earnings go.
Big footprint. Speaking of big footprint, big shoes to fill. The great Peter Tuchman, thank you for being here. Time for the belt. Seven market cap weighted sectors higher, but 9 equal weight sectors moving higher on the day. Staples, telecom, discretionary. Your best sectors in the S&P 500. Your laggards, energy, utilities, and tech. Final tail of the tape, the S&P up 0.02%. The Dow moving up, looks like 0.5%. The New York Stock Exchange Composite Index up 0.44%, and the small caps, the Russell 2000, up 0.6%. Salesforce, Amex, 3M, your Dow winners, a lot more on Salesforce here in just a few minutes. Your Dow laggards, NVIDIA, Caterpillar, as well as Chevron. Let's bring in Michael Reinking, longtime friend of the show and a very good friend of mine personally, senior market strategist here at the New York Stock Exchange. So it's interesting, as Tuchman and I were just talking, XLK down, so market cap weighted tech down, but equal weight tech in positive territory. We're seeing themes of rotation. If you know where to look, what do you see more broadly, Michael?
Look, so it's been a lot of violent rotation happening within the market. Right, if you look at today specifically, right, there was a lot of optimism coming out of the weekend as we've seen like the de-escalation in Iran, right? But I thought that the bigger story was kind of the NVIDIA financing stories that we had seen. Right, since Friday, there were reports that NVIDIA was going to backstop or finance about $1 trillion worth of AI-related spending in South Korea and also in Ohio. That had the tech sector higher this morning, but that very quickly faded, right? As you started to have the concerns around circular financing and circular deal announcements coming back into the market, right? You saw the momentum stocks, the semis, the memory stocks that have all been leading us higher, come back under pressure again, right? And we're still not seeing that buy the dip response, right? It's every time we've gotten a rally over the last couple of weeks, we've seen markets sell into that rally. From a technical perspective, right, the S&P 500 also got right up into a pretty key level.
So let me ask you a little bit more about circular financing, because our viewers know we're right in the middle, right smack dab in the heart of Megacap earnings. Is the concern over circular financing, the relationship between the NVIDIAs and the OpenAIs, is that something we might learn more about when we get these Megacap earnings the next few days, or is it something kind of they don't necessarily want to talk about as much?
Look, I think financing as a whole is what markets are concerned about. Right, we saw bits of that last week when we had Alphabet earnings and Tesla earnings, right? Alphabet in particular was very, very strong. They raised their CapEx guidance for, the AI spending, right? And markets took those stocks lower. It was the first time in the company's history, right, that they had negative free cash flow. Now, as we move into kind of Microsoft and Amazon, right, that is going to be kind of the big question in terms of where how markets are going to continue to finance and pay for all of this AI spending. And I think that's really where the concern is, because you're seeing, not only debt financing is getting more expensive, but as the equities move lower, right, your cost of capital, it just gets more expensive as we kind of continue through this cycle.
We got Microsoft and Meta Wednesday, Apple and Amazon on Thursday. Let's go back to the S&P 500 and the technical levels, because you and I were chatting earlier. We did gap back up to the 50-day moving average, which right now is around 74.70, but it did not hold.
Correct.
What are you seeing and what are you tracking as the week moves along?
So, we gapped right up into kind of filling the gap from Wednesday's close after Alphabet's earnings, right into that 50-day moving average, and then we quickly sold right back off. It was all tech-related selling, though, right? I mean, as we pointed out, right, the underlying breadth today was pretty solid, right? But we saw that sell the news response. We retested last week's lows, just under 7,400. So that is going to be really key as we move through the rest of this week. 73.75, you break that level, you're potentially looking at a move into kind of the 7,200 to 7,250 range, which is a retest of the June lows, the 100-day moving average, and then if things were to really get dynamic, you're looking at the 200-day moving average closer to 7,000.
It's a fun week. When we're through most of the interview, we haven't even mentioned the Fed. Hello, it's almost Fed Day. Before we let you go, certain things you'll be looking for as we officially hear from Mr. Warsh for the second time in his role as FOMC chair.
Look, it's a really interesting Fed meeting, right? Generally speaking, you really know what to expect. I think markets widely expect the Federal Reserve to kind of leave rates unchanged. We've seen probabilities start to move higher, right, as you're having kind of, as you see the front end of the curve is trading above where the Fed funds target is, right? And we're, pricing in about a 1 in 3 chance of Fed rate hike this week, right? Fed Warsh is a bit of a wild card, right? He's, talked about not, providing any forward guidance. In the previous regime, if kind of markets were getting a little ahead of themselves, you would typically see kind of a story coming from the Wall Street Journal. This time around, there's a little bit of uncertainty. I can make the case as to why they would actually want to go now, and after the initial response where you'd probably see rates move higher and markets move lower, you might see the rate environment start to normalize as kind of he kind of solidifies his kind of price stability credibility.
There's no person down here on the trading floor I would rather hear from to kick off today's show for what a consequential week for the markets and for your money. Michael Reinking, thank you for being here, my man.
Thanks for having me.
Nice to see you here. Robbie will grab your mic. We'll head this way here with a few of the top analyst calls that moved the tape this morning here on Wall Street. First up, Phillip Capital upgrading Alphabet to a buy, saying they are constructive on the stock's long-term outlook after earnings. Shares rebounding a bit in the session today, more than 2% after that sell-off on Thursday Michael Reinking and I were just talking about. Number two, Jefferies upgrading General Motors to a buy, saying its main takeaway from Q2 earnings was seeing robust free cash flow. Maybe something Alphabet wishes it had a bit more of these days. GM up 2.5% today, retesting its all-time highs. That's a legacy stock. Finally, Wolf sticking with its outperform call on SpaceX this morning after the 13th Starship test flight was successful last week. Shares hitting, however, a new all-time low for shares of SpaceX, 108.66 intraday earlier today. Howard, we'll take a look at a couple stocks that call the big board their home. How about Salesforce? What a rotation today at long last. Yeah, shares up 6%, the best name in the Dow today. Just also happens to be the worst name in the Dow this year. But we did see rotation into this and other software plays today like ServiceNow, MongoDB, Adobe. They all did well. Shares down 34% for Salesforce, just about tied with Nike at the very bottom of the Dow. Howard, let's shift around. Let's take a look at Bud. This is Anheuser-Busch InBev, down about 1% on the day. Barclays downgrading the stock to equal weight on concerns of a potential slump in sales following all of the hype, the enthusiasm surrounding the FIFA World Cup. Also, the nation of Brazil has a new consumption tax. It's also known as a sin tax. Shares still up in the green, however, 26% since the start of 2026. At the 2026 Aspen Ideas Festival, the New York Stock Exchange's very own Kristen Scholler sat down with Senator Kirsten Gillibrand of New York. They talked all about her fight on the latest cryptocurrency legislations and, of course, much more. Take a look.
The New York Stock Exchange is a proud supporter of the 2026 Aspen Ideas Festival, and I'm pleased to be joined on site by Senator Kirsten Gillibrand of New York. Senator, welcome.
Thank you.
What brings you to the festival this year?
I'm doing a panel on the future of cryptocurrency, blockchain, AI, and on bipartisanship.
And what are you planning to share on that panel for attendees?
So Cynthia Lovemus and I, we're going to talk about the work that we do together to get things done in the Senate to help the American people to write laws that can make our economy strong, make us competitive worldwide, continue to allow us to compete and to innovate and be at the forefront of technology.
You referenced earlier that you're going to be speaking alongside Senator Loomis. Of course, she's a Republican from Wyoming. You're a Democrat from New York. How did you two come together to work on cryptocurrency?
So about almost 5 years ago now, Cynthia and I both expressed interest in this area of the economy. And New York is an innovative part of commercial and finance. We are the center of the world financial markets. Wyoming, her state, was very much at the forefront of builders, particularly of Bitcoin and the advent of mining and building on the blockchain. And so we both had a reason to want to regulate this industry well so that we could be competitive with the world and so that our consumers, our customers would have safety and soundness, would have protections, would be able to build businesses here, have it be regulated, and be able to compete worldwide. And so that incentive got us to work at the table together over the last 5 years, and we have a piece of legislation that is nearing its final stages, and we expect it'll pass sometime this summer.
Interesting. What is going to fuel that passage?
So there's been a lot of bipartisan work that has been very rigorous to make sure we have strong consumer protections, to make sure we have a strong ethics rule so that members of Congress, senior administration officials, president and vice president can't issue cryptocurrencies or stable coins. We want to make sure that we have appropriate levels of guardrails. We have to make sure that consumers are protected in understanding what they're buying and what the differences are, and that the regulators, both the CFTC and the SEC, can play a vigorous role in oversight and accountability.
Artificial intelligence is another key theme that we hear about in nearly every conversation that we have. As a senator, what is your view on AI?
So AI has the potential to be the greatest opportunity for humanity. It has the potential to cure diseases, to eradicate cancer, to have breakthroughs on every type of area of science, mathematics, healthcare, innovation. It also has a huge potential to do grave, grave harm, to allow such compute power to be in the hands of people who seek to do harm, whether they're building new viruses or whether they are using AI to generate different types of weapons or create chaos. It's all possible. So you need strong leaders in Congress, Democrats and Republicans, who are willing to take the responsibility of finding common sense bipartisan regulation that allows us to continue to build, innovate, compete, and outperform our adversaries and even our competitors, such as China, but also make sure we have the kinds of safeguards, the kinds of guardrails that allow us to protect our kids, to protect our healthcare system, to protect vulnerable seniors who are constantly being scammed. We have to make sure deep fakes don't destroy people's access to factual information. We have to make sure that people know what's truthful and not truthful. And so those are the types of issues that we need to wrestle with to write good common sense regulation to make sure we can continue to grow, thrive, innovate, but also protect those we love the most.
How do you think AI can be harnessed for good?
Well, the easiest example is in the healthcare space. I think the compute capability is so significant in AI that it will be able to have massive scientific breakthroughs for curing disease and for providing access to better healthcare to more people around the globe.
All right, Senator Gillibrand, thanks so much for sitting down with us here at the festival.
My pleasure.
Welcome back to the show. You're watching this Monday afternoon edition of Taking Stock live from the trading floor of the New York Stock Exchange. And Terrence McMenamin joins us now. He is the CEO and co-founder at Tech Dollar. Nice to see you here today.
Thanks for having me.
So let's talk all about the private company trap. Let's assume, I wish this were true, that I had a multi-billion-dollar private company and on paper, I'm a millionaire and I'm crushing it, but I might not have access to that.
Yeah.
Where do you step in from there?
Many such cases. Obviously, equity timelines have stretched, right? Used to see around 5 to 6 years to IPO. Now we're seeing on average around 11. That leaves a lot of engineers, guys like yourself, running multi-billion-dollar companies that are quite paper-rich, but not able to afford engagement rings, down payments on homes, quality of life improvements, cover, tuition bills, things like that. So that's where Tech Dollar comes in.
And I know you want to build the borrowing system around that wealth, even if so much of it is on paper for far too long for those people. You call it the credit layer for private markets. What does that actually mean?
It basically means that no one's built the plumbing. What Tech Dollar has done is we've come in and we've basically looked and repriced what has essentially been evaluated as speculative venture across asset classes in frontier AI labs, robotics, compute, chip adjacency, you name it. These assets are basically hardening as collateral, and so should the borrowing markets around them.
Usually if someone sells, there are, in addition to many other things, capital gains taxes you got to pay. Borrowing inherently looks a fair bit different. Talk to me a bit through the math, the actual taxation. Make it make numbers and sense.
Yeah, so no tax advice coming from me. I'm sure there's lots of great accountants that can do that. But obviously selling is a taxable event. Borrowing at funding is not. When you sell, you basically give up all your upside. Borrowing allows you to basically retain what you've put so much value into building without having to surrender, the growth of that asset behind it. And you also don't have to give up what would be, say you're sitting on $1 million of equity in your frontier AI company. You might take home $600,000 after taxes. If you borrow against it, you'll take home much more than that. So the outcome's the same in terms of liquidity, but it's much more favorable for you in terms of how much cash you can actually tangibly realize.
There's a lot of challenges to private companies. There is no continuous, let's say, public price discovery, for instance. And I wonder what historically that does to lenders who are looking at all this amazing technology, AI, robotics, space engineering, whatever it is, for companies that are still private.
Yeah, so what we do is we look at mark to market rather than looking at stale funding rounds. That allows us to basically evaluate more realistically what the actual collateral is worth and make our lenders who are providing liquidity to our borrowers much more comfortable.
What are the trends that had to come together to make this possible now?
It's growth of the asset class, right? It's maturity for robotics, for AI, for semiconductors. As collateral hardens, obviously the risk decreases in terms of lending against these assets.
What most excites you, not just about where you are now, but what this could be tomorrow? What could it look like?
It's a big unlock. It allows the guys who have put the most value and time into building these companies, who are fundamentally changing our day-to-day lives, improve their day-to-day lives themselves, while getting to keep the upside of the companies behind them.
Terrence McMenamin, CEO, co-founder of Tech Dollar. My man, well done.
Thank
Come back
you.
on the show anytime.
Looking
Don't go
forward
away. A
to
lot
it.
more Taking Stock coming up live from the trading floor of the big board right after this. Welcome back to the show. Time now for a few headlines in the world of fintech, cryptocurrencies, and artificial intelligence that you need to know for your Monday afternoon. At this hour, the crypto majors are in mixed territory. Bitcoin currently holding on right around 64,855. Next up, the Wall Street Journal first to report NVIDIA in talks to guarantee $250 billion in financing for a massive OpenAI data center project in the state of Ohio. Finally, the CFTC warning prediction market operators they cannot use generic filings in order to launch brand new event contracts. They therefore must provide detailed disclosures for each individual contract. The New York Stock Exchange's own Ashley Mastronardi, sat down with Allison Ellsworth of Poppy. They spoke at the Uncharted Summit in Southampton, New York, to discuss her multi-billion-dollar success story. Take a look.
I started Poppy because I had a personal problem, I had tummy problems, couldn't figure it out. And what we find is people don't read labels. They don't know what they're putting into your body. So I took it into my own hands and I created the first version of Poppy. Then I took it to retailers nationwide. It became, I would say, the internet and America's favorite soda. Then selling it to Pepsi for, let's call it $2 billion. Let's round up on that one. But it's really living the American dream.
And this is a prebiotic, not a probiotic. What is the differentiator there?
Oh, it's a great question. So Poppy has 3 grams of prebiotics, which is a fiber. So probiotics is what you might find in a yogurt, a living culture, sauerkraut, kombucha. All of those things are probiotics. We are a prebiotic, so it's a fiber. It's really simple.
How did you navigate fundraising for Poppy?
So like I said, I mentioned the American dream. I actually went onto Shark Tank and got a deal on Shark Tank. And after getting that deal, we met our shark and he was able to fund us the entire way. So we raised around $65 million over a period of 5 years. And we're one of the fastest growing beverages in the history of beverage, from 0 to 500 million in 4.5 years.
You started this because you mentioned you had a personal problem and it's really become a category disrupting brand. What does it feel like to have made such an impact like that and helped so many?
Well, our mission was always to revolutionize soda for the next generation. And now Poppy's in over 1 in 4 households in America. And it's just so cool. We're at this event here. I get to see people walking around drinking Poppy and their kids drinking it, and the next generation of soda drinkers. And that is real impact on Americans' diets, emotions, lives. It's just really fun. And I'm so happy I was able to create a legacy for ever. It's so cool.
Can you describe the product to me? Why do you think it has resonated like it has? What makes it so special?
I think that we are fun. At the end of the day, Poppy is intentional with their marketing. We're brand first, digital first, creative first, community first brand. And what that means is we lead with the brand. So it's Poppy colors. It tastes amazing. It's emotionally connected with community, and we move at the speed of culture. So we have billions of views on TikTok. We work with thousands of creators and community and UGC. And we're just, I think, the next generation of soda and how you market to consumers. And I really connected with it.
When you look at the next generation of consumer brands, what excites you the most?
That's a great question. So for me, it's something that's 20 to 30% better. I think this better for you movement, it's here to stay. People are reading labels. People are more concerned and more educated on what they're putting into their body. So I think that, yes, Americans love flavor, but you can have flavor and a little bit better for you. I don't think it has to be 0 sugar by any means. I think people like to indulge. I think protein is really, really big. I think hydration is big. So I'll be paying attention in those 2 categories.
Do you feel like you found a middle path with Poppy?
You know, when we launched Poppy, no one believed that we were a soda until we told everyone we're a soda. And we did the Super Bowl ad our 3rd year in business where we said soda 17 times. We tripled our awareness overnight. And after that, everyone started saying we were a soda. So sometimes you have to say it before everybody else.
Welcome back to the show. Time now for a few headlines in the world of startups, raises, and rounds. First up, Chinese memory chip maker CXMT soaring 530% in its market debut earlier today, becoming mainland China's most valuable company in the process. Next up, nuclear startup Antares raising $470 million to develop factory-built microreactors for U.S. military bases, with plans to deploy its very first systems by 2028. Finally, the Financial Times first to report that the Exploration Company, it's a European SpaceX competitor, is now in talks to raise at least $300 million to develop a reusable cargo spacecraft. And now Money 2020's very own Scarlett Sieber is back to explain the ways that fintech companies actually make their money. Take a look.
Welcome back. I am Scarlett Sieber with Money 2020, and on this segment of how fintech companies actually make money, we're going to be talking about Agant, a rare example of stablecoins entering the real financial system without pretending that there's something else. Agant issues a British pound-denominated stablecoin built for institutions, not retail speculation. So how does Agant actually make money? First, reserve economics. Like banks, stablecoin issuers earn interest on the assets backing that token. That is the core engine. Second, distribution, not hype. Agant focuses on being embedded inside regulated flows, not chased by users. Third, infrastructure positioning. It monetizes reliability and compliance, not volatility. So why now? Why Agant? Over the past month, Agant moved from concept to live institutional rails, pairing issuance with regulated on and off ramps. That is the difference between a token and a payment instrument. Agant isn't selling the future of money, it's selling money that regulators already recognize. And that, my friends, is how Agant actually makes money, by turning stablecoins from a narrative into infrastructure. If there's a fintech you keep hearing about and want to know the real business model, put it in the comments, it might just make the cut. In the meantime, back over to you.
Tomorrow here on Wall Street in the morning, we will get the latest quarterly results from a handful of key consumer and tech names. That includes results from PayPal, Boeing, Coca-Cola, UPS, as well as cruise line giant Royal Caribbean. And this time tomorrow after the bell, the latest results from Seagate. That's a memory giant, a closely watched one in this environment. Visa, as well as Ford Motors. Your final tail of the tape on this Monday, the S&P up 0.02%, the Dow up 0.5%, the small cap stocks up 0.6%. Thanks for watching today's edition of Taking Stock live from the New York Stock Exchange. Have a great Monday night. We'll see you again tomorrow.